Hey everybody, Tuesday, September 25th, yesterday, Monday. I was busy working on the new issue of MMT Trader that is out, that was sent out. If you want to get a copy of that, please go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. Don't forget, too, the MMT Trader Dinner to be held in New York City, November 10th. You could sign up for that on the website as well. Just go to pitbulleconomics.com/MMT dinner. It's $250 per person. It's going to be held in right down in Wall Street. It's going to be a fun time. Meet everybody, and we'll talk. I'll tell you stories. We'll discuss, and whatever. We'll have drinks and dinner. It's going to be great. All right, folks, this morning, the 10-year Treasury yield hit 3.12%. 3.12%. That's a new high yield for the year. That's a new 4-year high. I predicted all this. Remember, you can go back and look at some of my earlier videos from this year where we talked about breaking the line. Remember that? Breaking the line, or it's going to break the line. Where I mocked the chartists who were drawing all these arbitrary lines on charts saying, oh, well, the yield can't go up until it breaks the line, as if the line somehow controls fundamentally policy and the monetary system and economic outcomes. It's really, it's incredibly, I mean, it's fascinating when you think about it, when people have bought into this crazy, almost like tea leaf reading, drawing lines on charts or trying to assign meaning to some sort of very subjective patterns they visually see on charts, as if that has any kind of meaning, or more importantly, as if that has any real impact on the underlying economics. It absolutely does not. So we broke the line once a while back, and then it came back down, and everybody was like, haha, you see, it did not break the line. And I was steadfast in my outlook that it was going to break the line. More importantly, what am I saying when I say that? Yields were going to continue to rise. How did I know that? I knew that because the central bank, the Fed, who was the price setter, the interest rate monopolist, was raising interest rates. I've been saying that since December 2015 when they reversed course on interest rates. I said you got to sell treasuries. Rates are going up. Inflation is going up. The dollar is going down. Gold is going up. The economy is going to grow faster because rate hikes are fundamentally fiscal expansions. The government is a net payer of interest when they raise rates. Government pays more money, flows to income. Yes, not equally, but it flows to national income. It also raises inflation because rate hikes are price hikes. I've said this a million times. The cost of credit is reflected in the cost of all goods and services. Now, all of these things are happening. I could tell you now that as long as the Fed tomorrow, because they're having a 2-day meeting which concludes tomorrow, there's going to be another rate hike. By the way, that will be the 8th rate hike since 2015. And if you go look at the dollar index, look at gold. Dollar index is down since then. Gold is up since then, even with this big correction that it has experienced over the last 4 or 5 months. Gold is still up about 20%. Dollar's down. Stock market's up. Economy's growing faster. All the things, inflation is up. All the things that I said was going to happen. And of course, I said this based on a very sound understanding of the monetary system, and MMT gives me that. So a lot of you are out there drawing lines on charts and trying to assign meaning to things that are essentially meaningless and trying to make predictions off of that. Don't you understand? You are guessing. You are guessing. I am not guessing. I can make an assessment or a forecast of the economic outcome based on policy. The only thing that presents any sort of challenge to me and to my people, my subscribers, my followers, is the behavior or the reaction on the part of what I like to call zombies, people who are ill-informed, who do not understand, who are basically believers in a flawed view of economics, what their reaction is going to be. Sometimes it's hard to gauge precisely the magnitude of their reaction. We saw it in this recent period from March until recently in the dollar, the rally in the dollar. Again, all under the same wrong story that interest rates were going to support the dollar, despite the fact that after 7 interest rate hikes, the dollar is lower. But they keep believing in that story. I said the dollar rally is a correction in a bear market. We're starting to see the dollar turn down. It's turning down slowly because you still have a lot of these portfolio flows being driven by this false belief that the rate hikes are going to somehow support the dollar. Also, injected into that picture this year was the whole trade war story. And again, lots of people believe that the United States imposing tariffs and basically raising prices on itself is somehow bullish for the currency. It is not. It is not. And it will unravel over time. So all of that is going on. Now, the rate call was a call that I have been really putting out there, like I said, since December 2015 when the Fed reversed course on monetary policy. I said that was the moment when you're going to start to see inflation reverse and go higher, commodity prices go higher, gold go higher, the dollar go lower. All of those things have come to fruition. And they will continue to play out in that fashion as long as monetary and fiscal policy remain on course. Now, by the way, my subscribers know that last week, the United States government set a new all-time high record in spending. We surpassed the 2009. That was the stimulus year, the $787 billion stimulus that basically stopped the Great Recession. We surpassed that last week with $4.62 trillion net spending so far, and the fiscal year is not over. We still have a few more statement days left, but we made a new all-time high record. When you have spending of that magnitude, by the way, why is it that so many economists and market analysts and observers are baffled that this has been the longest expansion on record? Why is it that so many economists and market observers are baffled that the stock market has now had the longest rally on record? It's because if you go back and look at the spending since 2009 of $4 trillion plus annually, this year 4.62, maybe you end up to be 4.65 trillion annually, that has been an enormous amount of fiscal support. We came nowhere close to that in years before 2009. Years before 2009, you basically were looking at something like 2.5, 2.6, 2.7 trillion. We're almost double that. So all of these years, 2009, 2010, 11, 12, 13, 14, 15, 16, 17, and 18, all been 4 trillion plus. That apparently has been the magic number because that has kept everything afloat. It has kept the economy on a growth trajectory. And this year, the growth trajectory basically beats everything that we have seen going back for all those years because of the magnitude of the spending. It's all about the spending, people. It's all about the spending. So, of course, I track that on real time. Nobody else does that. Nobody else does that. When you look at economists and they talk about what their forecasts on the economy is going to be, they're using data from that's a month old, 30 days old, maybe a quarter behind. I track all this real time. Track it all of it real time. So way ahead. I'm telling you this now about the spending. You're probably going to read about it or hear about it a week or two from now in the media. I get everything before everybody else. So yeah, we have that. As long as the Fed stays on course, and they're definitely expected to stay on course with continued rate hikes, you can expect higher bond yields, lower bond prices, more inflation, a weaker dollar, higher commodity prices. That's what's going to happen. Faster economic growth. We are going to overheat. And what is their reaction going to be? Their reaction is going to be the same thing. They're going to continue to raise interest rates. So, now, like I said, there have been times to hold a position like this, you're going to have to go through some times of turbulence. You're going to have to go through some times when people, zombies, are causing markets to react in a fashion that goes against your position. But you have to understand and have trust in your analysis and the outlook based on your understanding, very, very concrete, solid understanding of how policy affects markets and the economy. You are not a trader. You cannot call yourself a trader. You cannot call yourself an investor unless you have faced and experienced adversity and handled it. People, it is human nature that they want to avoid discomfort. It is human nature that they want everything to be easy and smooth and stress-free and without effort. That is a fantasy. That is a hobby for some people, maybe wanting to approach it in that regard. To be a professional, to be a trader, to be an investor for the long term, to make yourself, to build yourself into a resilient individual, able to handle the swings. I've said this before, if the market was a living thing, if it was a living entity, its job would be to shake you up, to fool you, to deceive you, to scare you, to frighten you, to inject enormous amounts of stress into you. That's basically its job. It doesn't care about you. And by the way, you project those things onto the market by your own behavior, with your own emotions. To be a true trader, to be a true investor for the long term, and I'm not talking about the hobbyist trader who sits down with his charts every once in a while, makes a little trade, makes a little money, says, oh, I'm such a great trader. No, the real trader, the real investor, the guy or the girl who's going to stick it out and last and grind through and build up a fortune with confidence and ability regardless of the circumstances. You cannot call yourself that unless you have faced and overcome adversity. Difficult, hard times. Gut-wrenching, stomach-churning times where you can't sleep at night. Unless you have faced that and built that mental toughness, then basically you're just playing craps in Vegas. Sometimes you're going to win, sometimes you're going to lose. I had a lot of people come to me saying, Mike, I've been doing this a long time without any real result. Sometimes I make money, sometimes I lose money. And I heard about MMT, and I'm so excited. I want that MMT. And then what happens? They start, and the MMT starts working for them, and they see they have a real understanding of the economy and the markets and policy. And then what happens? They run into some adversity. And once again, their past behavior resurfaces. They can't handle the discomfort. They can't handle the adversity. They can't handle the stress and they quit. And then what happens? They do what they have always done. They go looking for the system fairy. The system fairy is a belief in their minds that there is some system out there, some methodology, some analytical approach that is going to take them without effort, without discomfort, without stress, without feeling any sort of adversity whatsoever, and bring them to their cherished goal of riches and fortune in a ball of cotton. Well, guess what, people? The system fairy doesn't exist. Those of you who are chasing it, and look, I understand, we're all human. A lot of people, they just can't do this. They quit. They quit. Some quit very quickly, right away. Some try to last, and then when it gets really, really tough, because you know what? When you try to last, it doesn't get easier. A lot of times it gets tougher and tougher and tougher. That's the market's job, to make you quit. And you quit. Only the ones who last and stick it out and form themselves. Yeah, form themselves in a way, like, what is it? Forge. Like when you forge steel, when you forge iron into steel. That's why they call it when you steel yourself. Only those people are able to make it through. And there are not a lot of people like that. There are not a lot of people like that. So what happens to the rest of them? They go drawing lines on charts. They buy into the false belief that taking losses is the path to success. It's kind of a sad thing. When you look at it, it's kind of a pathetic thing, but I don't care. It doesn't affect me. And it doesn't affect the people who have become the members of SEAL Team 6 here. Have a nice day.